Happy Wednesday. This is John McEntyre Show Live. I'm John McEntyre, and I honestly thought that today was Wednesday. I'm walking around, I'm talking, and I'm talking about it being Wednesday, and I was correct. It was like, well, if today wasn't Tuesday, I would say, yeah, it is a hot Wednesday. So I'm like, wow, okay. Um, they start meshing together, schedules, all this type of stuff. And I was just about to say happy Wednesday to you, but today is Tuesday, July 23rd, 2024, and we are 154 days away from Christmas. So you got a little time to get your shopping done because most people start talking about Christmas after the 4th of July holiday. I'm like, can I like enjoy the rest of the summer, fall? I like Halloween, for candy. I like Thanksgiving, So can I enjoy those days and not be pushed into Christmas? But some people, that's how they roll. They start decorating their house. If they take the decorations down, they start decorating their house in July, Christmas in July. So yeah, 154 days away from Christmas. Today is actually just a little special sidebar. This is National Ice Cream Month. Today is National Sprinkles Day. So this is a day to get those sprinkles on the ice cream, the extra sprinkles. And that one was given to me by my daughter. She showed me that. She felt that it would be important that I report that today. Uh, so yeah, there we go. But we have a good question today. It's actually about an adjustable rate mortgage, second mortgage. So I'm going to answer a question. It's a couple of moving parts. But let's cover some wallet wins that we received, answer the question, do our question of the day. Wallet win number one, completed my 6 month of savings. So that's good. 6 months of saving. That's a sign of some definite discipline and diligence and commitment to your financial future. So yeah, uh, not knowing what the goals are, if it's six minimum for me is 6 months. It used to be 3 to 6 months, but like I said, with uh, it's not that the job market is bad. It depends on the industry. It may take longer than 3 months. A lot of times it takes longer, or you may want to take a little break, sabbatical type thing, and back up and really assess life. So the more savings you have in place, reserves, then the more options you have. That's basically what a good financial picture does for you. It gives you options, and so that is to be commended. 6 months. Wallet win number two. I have finally paid off all of my credit cards. Yep, that's a big win. A lot of I like that one. That one's it's like very popular. People are constantly pushing to get those credit cards paid off because they realize just how much interest. And what I like, one of my we was looking at clients, was looking at their dashboard, and it was showing um, the area where you make the payment, and it's going to always ask, do you want to make more, or if you make this much more, it can actually do this for you and all of this. And one of them said, based on you making a minimum payment, you will have this paid off in 21 years. And so I was like, oh yeah, that's a serious motivator. You know, that trip you put on the credit card and those couple of little things, you're going to pay for them for 21 years. I mean, you can almost have a 30-year mortgage. You can have a house paid off almost in the same amount of time. Or if you do those little extra things to your mortgage payment, not refine or anything, but just like the payment every other week or whatever, breaking the payment in half and paying it every 2 weeks. You can actually pay your house off before a credit card, before some stuff that you finance that you probably don't even remember or have any longer. You know, and I'm like, now that's a motivator to actually put that on screen to see that. I was like, yeah, that's serious, and now I understand why they're so on fire to get those things taken care of, because they were like, oh yes, when I saw that, I got really really motivated. So yeah, wallet win number 3. Uh, Money from our garage sale was enough to pay for school supplies. Yep. Now we're getting the school supplies right now because some people they hadn't thought about it. I've had conversations with people and was like, yeah, I was watching and I was like, wow, it is time. Before you know it, the kids are going back. I mean, even our school district, we have just a couple of weeks left. They're back in school. Um, what is it? August 9th, 8th, 9th, something like that. So yeah, we only have a couple of weeks. So if you've been putting it off, it's time to get out there because they're getting serious now. The stores, the paper, notebooks, things like that, starting to thin out a little bit now. People are beginning to jump on them, and also the national average. I saw a couple of stats yesterday. National average for school supplies is $800. For college is $1,400, not counting tuition and room and board. This is supplies to take to college. $1,400. That's the national average for college. $800 just for regular school, kindergarten up to high school, pre-college. So yeah, now you see why it really needs to be in the budget. The clothes, and especially at high school level, they need a notebook for each class and, a specific type and notepads and laptops and, all of this stuff, not counting the latest fashions that will be so-called out of date next week, so that, that's serious. 800, I was thinking about that. I was like, if we spent $800 probably over half, if not all, of my school, school time, not counting the college part, but just kindergarten of the high school, like $800. That's a lot. If I could take $800, get in a time machine, take $800 back to when I was in school, man, I would have a new outfit, a new fresh outfit every day. But let's move forward. And not counting $1,400. Oh my goodness. You can buy one of those, what was those little samurai jeeps? You can buy one of those to drive it. So, all right, I'm going to stop being funny. Okay, we're going to move forward with the question. But those good wallet wins, we had 3 good wallet wins there. Completed 6 months of saving, finally paid off all credit cards. Money from a garage sale was enough to pay for school supplies. So that was a good garage sale there. And so, moving forward, if you have any wallet wins to share them. And we see them, make sure you put hashtag wallet wins in front of it. We'll share it as we're going forward on the show. If you have any questions, put a Q, uppercase Q, and we see it. We'll tag it, flag it, and we'll make sure to get it answered for you before the end of the show here. So let's get to this question that I received. And basically, here it goes. It's definitely abbreviated for for TV purposes, but I'll read out the entire thing here. Um, we have a mortgage with a $160,000 balance and an adjustable rate mortgage uh, with a balance of 90,000. A second a second mortgage that is an adjustable rate mortgage with a balance of $90,000. I'm self-employed and my wife is a stay-at-home mom. I have a good income, but it fluctuates each month. We just sold a property and we have $200,000 left after taxes. Should we pay off both mortgages or just the adjustable rate second mortgage? All right, so we have a lot going there. The good thing, we have some money to work with. Um, Self-employed, so they kind of know what their situation is. Self-employed gave that each month their income fluctuates, and so we have $200,000 left after taxes. Should we pay off both mortgages or just the adjustable rate? Not knowing everything, I would say right off the bat, get the second adjustable rate mortgage paid off. Get it out of the picture. And the main reason is because it is an adjustable rate mortgage. Uh, an adjustable rate, they're notorious. I've seen them. They I've seen them work in some plans, but the people that were using them, they were very sophisticated and they had an overall strategy. They had no intentions of holding it a long period of time anyway, uh, and they just knew what they were doing. I've seen more horror stories from it than actual, good things happening from it. The good part is in the beginning, it was very low rate, but then as it started to adjust upwards, and it all depends on, you know, it's two factors with the adjustable rate mortgage. Number one, when will it start adjusting, and how much will it adjust? Those are the two factors. The percentage rate, because a lot of times they do start off kind of low right now, 2.99%, even lower, some a little bit lower. Those those babies can jump up to 10, 15, 20%. It depends. It depends on the other variables, but the national average is 2.99 to 10% is usually where they will make a spread. That's a huge jump. That's a huge spread. 2% to 10%. That's a big time jump. Um, if there's a strategy in place and you say, hey, my particular adjustable rate mortgage, I got it at 2%, and in 2 years it will start the adjustment period, and it's going to go 1% every year. Okay, well, in 2 years, I kind of want to have this thing paid off within a 2 year period. That's what I've seen. The smart strategy. Like I say, that was very few and far between. I've only seen, honestly, a couple of people actually do it that I've had contact with, that I've dealt with, and they were actually in the real estate industry, so they kind of knew what they were going to do and had their plan in place. But outside of that, adjustable rate, second mortgages, because you're putting your property, your primary residence in jeopardy. If something happened, it adjusts too high, you can't do a refi or whatever. Now your property, your home is actually in jeopardy here. So just right off the gate, let's get that off the books. Let's just take care of that $200,000, 90,000, pay it off. You still have 110,000, you know, to play with. Now, the reason why I haven't addressed the first mortgage, which is $160,000 balance, there's a couple of questions I would want to know. Number one, is this your dream home? Is this your final home? If it is your final home, there's nothing wrong with paying it off. If it's not, you're planning to sell it, um, I wouldn't pay it off. I would just make payments, and then when it's definitely time to sell, I would sell, because that's always been the rule. I've always said, and I've always seen it is work time and time again, is when you move into a home and it's not your final home, not your dream home, um, plan to be gone 5 to 7 years. 5 to 7 years, and it's still sort of making financial sense to you. Anytime over that, then you may, start the process of paying it off, or do something, real. Just look at your plan, look at your strategy again. Other thing is, what other expenses do you have? Other debts to pay off? Do you have the car to pay off? Credit cards, any loans, anything like that, student loans, whatever. Do you have anything like that to pay off? Um, there's other areas to attend to also. Do you have an emergent? Is your emergency fund in place? Your living expenses, your reserves, are those in place? Um, Family wise, you're married and your wife is a stay at home mom, so that means you have kids. Uh, is everyone adequately insured? Do you have the right amount of life insurance for yourself? Uh, Stay at home mom, your wife, she's stay at home, something happens to her. Remember, we need that. We need money to handle that situation. If something did happen, um, she wasn't able to take care of the home, or the worst happened, she passes. You need money to help pay, because you probably wouldn't be able to stay at home, become a full-time stay-at-home parent yourself, because you're the sole breadwinner. So you would need that money in place. Disability insurance, in the for yourself. and for your wife also. Make sure you have that. Um, and with the emergency fund and the living expenses, you're being self-employed, fluctuating income. That's at least 12 months of reserves, at least, because of being self-employed. We don't know what the market may swing on you, and you could have been doing well. Market swings, or service becomes obsolete, or whatever you do may not be as popular or as in demand. So we would need maybe 12 months. We would up it to at least 12 months. Shoot for that. And are you on target for retirement? Well, let me back up. Kids college fund, education. What are the plans for the education funding? Um, so you have that to think about. Then we also have the retirement to think about. Are you on target for retirement? So those are the variables to really look at. But backing up into it, just get rid of the adjustable rate mortgage, have the 110,000 to do other things with it. Then if all of those things are in place, um, I would at least make sure that the retirement is maxed out. Everyone's retirement funds are maxed out. Anything for the kids, and then whatever's left, I would apply it to the actual balance of your first mortgage, the actual mortgage on your home. So that's how I would take care of that. So as you can see, there's a lot of moving parts, but if you if you left with anything, take care of the adjustable rate second mortgage and get that out of the way. So I hope that answered that question. It's a lot to think about as far as that goes. Now, I was having a conversation with someone, and the conversation swung to being regretful about something. They had made a purchase, and they was like, "There's nothing I can do. I'm stuck." And this is the biggest regret, probably one of the worst purchases I've ever made. Definitely the worst purchase of the year. And so that gave me a question of the day. What have you bought this year that you wish you could return? Because this person was stressed. He was seriously stressed out about this. He was like, I don't what I was thinking. He said it was all emotion. I rarely do that. It was an emotional purchase, and now I'm just stuck with it. Or if I do sell it, I'm going to take a loss. So he just put it in the chalk it up as, stupid mistake. So that is the question of the day. What have you bought this year that you wish you could return? Share that on Facebook, on YouTube, on our social medias. Uh, Before I go, like the video if you like it, like the show, share it, share the wealth, and tune in, come back tomorrow, same time, same channels. We'll talk.